In a bustling coffee shop, Alex Lynch, a young investor, stumbles upon Peter Lynch's seminal book, One Up on Wall Street. Highlighted passages reveal Lynch's core principle: buy what you know. This mantra encourages investors to leverage everyday observations, like favorite brands or services, as a starting point for stock research. Studies show that retail investors who follow this approach often outperform those relying solely on analyst reports. The scene captures the moment of inspiration as Alex closes the book, ready to apply Lynch's wisdom. Alex begins noticing brands they interact with daily: smartphone apps, grocery items, and clothing labels. Research indicates that consumers often overlook the investment potential of products they use regularly. For instance, Lynch famously invested in Dunkin' Donuts after observing its popularity. Alex jots down these brands, recognizing their consistent demand. This step underscores Lynch's belief that personal experience can uncover undervalued opportunities before Wall Street catches on. Alex delves into financial statements of a tech company they use daily. Key metrics like P/E ratio, revenue growth, and profit margins are scrutinized. Lynch emphasized that what you know must be backed by data, avoiding hype-driven investments. For example, Apple's stock surged 10,000% since 2000, but only after validating its innovation pipeline. Alex sticks notes with critical numbers to their laptop, blending personal insight with disciplined analysis. With research complete, Alex clicks buy on their trading app, investing in the tech company. Lynch's strategy highlights that small, confident bets often outperform diversified but uninformed portfolios. Data shows that investors who hold stocks for 5+ years see median returns of 120%. The green order confirmed notification symbolizes Alex's commitment to Lynch's philosophy, trusting knowledge over speculation. Weeks later, the stock dips due to market volatility. Headlines scream about economic uncertainty, but Alex recalls Lynch's advice: ignore the noise. Historical data reveals that 70% of stocks recover losses within a year if fundamentals remain strong. Alex resists panic selling, instead revisiting their research notes. This moment tests the discipline behind buy what you know. Alex visits the company's store to assess real-world demand. Crowds and positive reviews align with their thesis. Lynch often visited stores to gauge customer enthusiasm, a tactic that helped him spot winners like Walmart early. Retail foot traffic data confirms strong sales, reinforcing Alex's confidence. This step bridges intuition and evidence, a hallmark of Lynch's method. Over lunch, Alex explains Lynch's mantra to a skeptical friend. They cite examples like Nike and Starbucks, which rewarded investors who recognized their cultural ubiquity. Studies show that word-of-mouth investment ideas from trusted peers have a 65% success rate. The friend leaves intrigued, proof that Lynch's principles resonate beyond textbooks. Months later, Alex's portfolio rebounds, with some stocks up 40%. Lynch's Magellan Fund averaged 29% annual returns by sticking to this approach. A printed statement shows upward trends, validating patience and research. The lesson? Buy what you know works when paired with due diligence and time. Alex now leads a workshop at a community center, teaching Lynch's principles. Whiteboard notes emphasize know-how plus research equals success. Surveys show 80% of attendees feel more confident investing after learning this framework. The scene mirrors Lynch's legacy, making investing accessible through relatable, actionable advice. Back in the coffee shop, Alex mentors a new investor, passing along Lynch's book. The scene mirrors the opening, showcasing how wisdom compounds. Lynch's philosophy thrives because it's timeless, combining curiosity, discipline, and trust in one's own observations. As the new reader opens the book, the cycle of education and empowerment begins anew.